Hello and welcome to GSC Grays podcast. I'm joined today by John Coleman, my fellow director and head of agency. John, we thought it would be useful to have this discussion today given the current economic and political climate leading into the budget. The question that many of our clients are asking us is what's happening with the residential property market? What are we seeing and how do we expect that to change?
Well, I think the sentiment generally is one of anxiousness, uncertainty, and with a certain amount of optimism behind it. There's been so many ideas put out there by various political parties, from scrapping stamp duty, which clearly people would like the idea about that, all the way to this awful notion of a mansion tax. So there is concern, and I think what concern and anxiety and uncertainty creates is people stop doing anything, and the market has got very slow as a result. There are always people who want to get on with things, but they're just waiting. They just want to know what's going to happen, and then they'll make some decisions.
Those thinking of possibly selling their property, whether later this year or early next, what would be your message to them?
Plan now. I'd get on with it. The market works in a relative way. When there are good things that happen, the price of your property stays strong, stays whole, but then the price of what you're moving to also has the same momentum. And I think what will happen that once we understand what is going to come of this budget and those that impact directly on the residential housing market will be across the board. And certainly in that core market that we deal in, that rural north of England market, which is always a popular one, it will just remove the logjam and things will start to get going. So my advice would be get ready, get prepared, work out what it is that you want to do, and then be one of those people who is proactive, prepared and ready to sell. And I think you will find that the market will do you well.
So your sort of forecast predictions for 2026, where do you see the property market going in terms of values?
I think there'll be pressures. I mean, at the moment, we are so oversupplied with top-end property in this region, and there needs to be something to unlock that. Now, we were hoping it might be interest rates, but the speed within which that has failed to come down hasn't done any good. And now the weight has been put on the other end with the threats of mansion tax. I think that will be a very sticky market. And I think we will see the £2 million plus end of the market come under real pressure. The core market, the sort of £500,000 to £1.5 million market, where the majority of families are trying to aspire to go to the next stage, I think there will be much more movement in that, but I don't think it will be as a result of a huge price drop. People are talking about price corrections to make things happen. Unless you see a significant correction of 10% plus, that is not going to change the market. I think it is about people understanding the environment within which they have to get on. And I think we'll see those properties move, and I think prices will move there or thereabouts where they are now without a significant major change.
And do you think sort of current mortgage rates at sort of many on the market now below 5%, do you think we're going to see any material movement there that's going to impact on the market?
Not a huge impact. I think there will be, the expectations are there'll be another couple of interest rate reductions by the end of this financial year. I think the market has already written most of that in, and so the products which are being offered on the market now are where they're going to be. If they change, it'll be another 0.25%, maybe 0.5%, but that isn't going to significantly change things in my view. Like all these things, you need a radical change to really change the impetus of a market.
So John, the farm market, how resilient has that been in 2025?
I think surprisingly resilient. We were expecting a lot more land to come onto the market this year as a result of the changes that are going to come in inheritance tax and the back of bad harvests, continued high interest rates, higher costs. There was a real fear that there would be a lot of land coming to the market this year. There was a certain amount. It was certainly more than the year before, but I think the supply and demand balance remains in favour of the supply. So we are seeing relatively strong prices, being held through. There's always exceptional prices when you've got neighbours who really want something. But the general farmland prices have held up well, and there are very few farms that have remained unsold this year. There is a bit of pressure coming on the more marginal hill farm. And I think we need to keep an eye on that, because I think that they are, despite the red meat prices in the market at the moment, the profitability of these units is still very, very small. And I think they will come under serious pressure. We were hoping they were going to be underpinned by more of a natural capital market. And I think that has failed to materialize in the way that we all expected. And the further up the hill you go, the more underpinning that presented to the market. When you add in the forestry market as well, that gave it a pretty strong base. That has not continued in the way that was expected. And I think the premiums that we're seeing across that part of the market are much less than anticipated.
And are you finding the farms and land that you've had on the market and sold, are they largely being bought by farming clientele, or are they being bought by investors?
It's mainly farmers. Yes, of course, you get lifestyle buyers, but you're talking about non-productive farms. Productive may not be the right word, but you're talking about farms which are not economically viable, and those farms are lifestyle buyer farms. They are able to buy them and enjoy them. It's not about commerciality. Farmers have been strong. They've been well supported by the banks in the main. And where they are looking to expand their markets, good operators are strong players in the market, and they have been buying the majority of the good units that have been offered for sale this year.
And the budget, John, obviously there's talk of potential capital gains tax changes. There's talk of, we're aware of the inheritance tax changes that are due to come in April. How do you feel that's going to affect the land market? And do you think we're going to see some significant shifts in 2026?
Yes, I think we will see more land coming on. I think it's just been what we expected this year will be transferred to next year when the IHT rules actually start to hit. And I think there's still been a little bit of burying heads in the sand. There's been a lot of succession planning, but probably not as much as there should have been. And I think we will see that there will be more units coming to the market. There will be chunks of bare land because people will be addressing their debt issues in the first instance, and there'll be those who just simply want to get out because they don't see it getting any better. So I think this year will be a transition year for agricultural land market, and it will be some good and some disappointing, I think, is probably the right way to summarize it.
And do you think land prices may start to come back and ease a little bit from what you're saying there?
Yes, I think there will, because without the pressure from non-agriculture, I think those upland farm prices will start to come back a bit. The yields from arable land has been really poor this year for the second year in a row, really. And I think that there will be pressure on those land prices to come back a little bit. There's always exceptions. There will continue to be exceptions. When the perfect piece of land comes up next door, people will go the extra mile to secure it. But I think generally arable land prices will not go up, and they might be under a little bit of pressure. We might see a few percentage points fall.
And if people are thinking of selling their farms or their land in 2026, what would be your top tips for them now?
Again, it's about preparation. I would get ready. I'd be early on. We're personally, through GSC Grays, we are bringing on 2 arable units right now in November. That's something we would never normally do, but I think you need to get ahead of the market. I would be saying to people who have made those decisions that they should get on with it. They should get fully prepared. They should be in a position to sell, and that when they've got an agreed sale, they need to make sure that they can get that sale through to exchange of contracts as quickly as possible. And that means preparation. That means getting on with it now.
If you have any questions or you'd like further information and advice on the sale of your property, please do get in touch.